Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Saturday Tech Video. What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Guys, this is your Saturday Tech Video, and listen, I do apologize. I'm pushing it out on Sunday. I was out of town visiting my mom, hanging out with my family and friends for the holiday, so I did not get to push it yesterday, but I'm pushing it today because I want to make sure that you guys have the information as we move into this next trading week. The Saturday Tech Video is going to cover momentum trading and specifically a lot of the underlying aspects that are associated with momentum trading. So it's a great video. I want you to pay attention. Real quick before we get started, I got some quick TWR updates. Give me 60 seconds to let you know of the products and services and the updates we have in store. And then after that, we'll get right into the video. As always, if you're ready, you follow me and let's go to war together, team. Traders War Room, baby. Let's get it right now. First up, I want to tell you about the TWR Easter discount, 50% off of Traders War Room All Access. The link is in the description. Guys, if you've ever wanted to join TWR and you've been kind of on the fence, take advantage of this 50% off. Basically, for the price of an upgraded value meal at a fast food restaurant, you can have the opportunity to come to TWR and grow, learn, and share as a team of market warriors and go ahead and make some of that good money with some of these fire trades. Next up, the TWR official merchandise line is now active, guys. Go ahead and get that TWR swag and let everybody know who you're rocking with. We have fitted hats, one size fits all. 6 different styles of t-shirts going all the way up from small to 3X. And we got them hoodies that I know everybody loves to wear. So go to this link right here, or the link is in the description, and get your TWR swag on. And finally, next class, guys, I'm going to teach you guys how to chart and trade patterns. 23 April, 1 p.m. Central Standard Time. Join me for $15, and you get to keep the recording. And we're going to take about an hour and 20 minutes, and we're going to go over all the different types of patterns and how to chart the patterns and visualize them so that we can catch these extremely profitable breakouts out of the patterns. So I hope to see you all there. Register for the class on the website. And listen, if you can't make it live, not an issue. I got you covered, okay? Just purchase the class, register the link that gets sent to your email, and make sure your name is on the auto distribution list, and you will receive your recorded copy. I hope to see everyone there, 23 April. So with that out of the way, let's go ahead and get into it, right? Momentum trading, what is this? Well, I'm sure you've heard these sayings before. The trend is your friend, let runners run, and maybe ride the wave and cut the fall. However, what do these all have in common? Well, to put it simply, the trades on investments are riding momentum, and that's the main point of these classic sayings for the strategy. Now, when we look at momentum investing on paper, it seems like an investing strategy that is more of a knee-jerk reaction to market information. The idea of selling losers and buying winners is seductive, but the files in the face of the tried and true Wall Street adage, buy low, sell high. We'll look at momentum investing and its benefits and its pitfalls during this lesson. With anything, there has to be a founder, right? Well, the father of momentum investing is a guy named as Richard Dreyfuss, who took the practice and made it into a strategy he used to run his funds. His philosophy was that more money could be made by buying high and selling higher rather than buying underpriced stocks and waiting for the market to reevaluate them. Dreyfuss believed in selling the losers and letting the winners ride while reinvesting the money from the losers into other stocks that were beginning to boil. Many of the techniques he used to become the basics of what is now called momentum trading or investing. So precepts of momentum investing seek to take advantage of the market volatility by taking short-term positions in stocks going up and selling them as soon as they show signs of going down. The investor then moves the capital to new positions. Basically, we've talked about this before, right? Compounding your winners and your profits into other profitable trades so that you can make more money on top of the money that you already made. In this case, the market volatility is like waves in the ocean, and momentum investor is sailing up the crest of one of those waves only to jump to the next wave before the wave crashes down again and again. A momentum investor looks to take advantage of investor herding by leading the pack in and being the first one to take the money and run. Now, when we're talking about elements of momentum trading, we need to understand that the market requires sophisticated risk management rules to address volatility, overcrowding, and hidden traps that reduce profit. Market players routinely ignore these rules, blinded by the overwhelming fear that they'll miss out of a rally or a sell-off while everyone else books windfall profits. Remember that word, FOMO? Well, that comes into play with this very much. So, looking at the rules, right, they can be broken down into the 5 elements. Number 1, selection, or what equities you choose. Number 2, risk, which revolves around the timing in opening and closing your trades. 3, entry timing means getting into the trade early. 4, position management coupled wide spreads and your holding period. And 5, exit points, which require consistent charting and monitoring. So one of the main questions I get all the time is, what ones do we choose? Well, when we're talking about momentum security selection, we want to choose liquid securities when engaging in momentum strategies, staying away from leverage or inverse ETFs because the price swing doesn't accurately track the underlying indice or future markets due to complex fund construction. Regular funds make excellent trading vehicles but tend to grind through smaller percentage of gains and losses compared with individual securities. Seek out securities that trade more than 5 million shares per day whenever possible. And we have plenty, especially right now when the market is acting up and heating up so violently, that trade in this realm. So high relative volume stocks. Many popular stocks meet this criteria, but even low float issues can turn into highly liquid instruments when news flow and intense emotional reaction draw in market players from diverse sources. We've heard this before, right? News is a catalyst, and the market sentiment is something that will push the market and gravitate towards the retail investor. Keep watch for the flavor of the day when new products, divisions, and concepts capture the public's imagination, forcing analysts to throw away calculations and recompute profit estimates. Remember, we talked about this before. I tell you guys, when you can see a product and it's a hot buzzword and you can actually kind of picture the future of what it kind of looks like. Example is this AI stuff that we talked about here recently, right? That was all of the buzz that was going on in Wall Street because people were just thinking this AI could do this AI could do that, this AI, was, limitless into its applications. That got people, thinking. That's where the money flows because they want to catch that and be first into that trend. Biotechs and small, mid-sized technology companies create generous supply of these story stocks. And we just talked about that right there. Robotics, AI. And I love the biotech because the biotech, especially when you're talking about Alzheimer's, dementia, Parkinson's disease, weight loss drugs, and diabetes, those are key right there. Those are huge money-making opportunities. You have to have tight risk control, right? So the risk side of the equation must be addressed in detail or the momentum strategy will fail. The pitfalls of momentum trading include entering too soon before confirmation, closing the position too late, missing changing trends, reversals, or signs of news in a choppy market, keeping positions open overnight with extending factors that potentially close that could cause radical different prices and patterns, and failing to act quickly to close a bad position. Another factor is perfect entry timing. The best momentum trades come when a news hits shockwaves, triggering rapid movement from a price level to another. In turn, this sets off buying and selling signals for observant players who jump in and are rewarded with instant profits. Another batch of momentum capital enters as the trade evolves, generating counter swings that shake out weak hands. The hot money population finally hits the extreme, triggering volatility, whipsaws, and major reversals. Early positions offer the greatest reward for the least risk, while aging trends should be avoided at all costs. The opposite happened in the world scenarios because most traders don't see the opportunity until late in the cycle and then fail to act until everyone else has jumped in. Ever been caught in one of those? It rides up, it rides up, it rides up, and you're like, you know what, this is going to keep going. I'm going to head to get in, and then boom, everyone sells, and you got caught holding the bag at the top, and it dumps, percentages or dollars right below, and you're just like, what the heck did I just do? So let's talk about position management, because this takes time to master because the securities often carry the wide bid and ask spreads. Wide spreads require larger movements in your favor to reach profitability while also grinding through wide intraday ranges that expose stops, even though technicals still remain intact. So you want to choose your holding period wisely because risk increases the longer you stay in your position. Now, day trading works very well with momentum strategies, but it forces players to take larger positions to compensate for the greater profit potential of multi-day holds. Conversely, it is best to reduce position size when holding through multiple sessions to allow for greater movement and stop placement further away from the current action. When you're looking at profitable exit when the price is moving rapidly into overextended technical state. This overextended state is often identified by a series of vertical bars on the 60-minute chart. Alternatively, the price could pierce the third or the fourth standard deviation of a top or bottom 20-day Bollinger Band. You want to tighten up on your stops or consider a blind exit when technical barriers are hit, like a major trend line or a previous high or low. Exit or take partial profits when crossovers signal potential trend changes. Some benefits of momentum investing can turn large profits for the trader who has the right personality and can handle the risk involved and take dedicated risks themselves, sticking to a particular strategy. There's also lucrative profits to be made from momentum trading. For example, say you buy a stock that grows from 50 to 75 based upon an overly positive analyst report. You then sell at a profit of 50% before the stock price corrects itself. You've made 50% return over the course of a few weeks or months, not an annualized return. Over time, the profit potential increases using momentum investing becomes larger and larger. Now, when we're talking about leveraging the market's volatility to your advantage, the key to momentum investing is being able to capitalize on the volatile market trends. That's what momentum trading is all about. Is volatility is your friend. Momentum investors look for stocks to invest in that are on their way up and then sell them before prices start to go back down. For such investors, being ahead of the pack is the way to maximize your return on investment. Now, this can work for the downside as well, but as we'll go into it here in a moment, the downside is usually less lucrative compared to the upside potential of a boom stock. Now, when we're leveraging the emotional decisions of other investors, we have to understand that Ben Carlson put a blog out, A Wealth of Common Sense, and the entire idea of momentum investing is built around chasing performance. That's the big takeaway. However, momentum investors do this in a systematic way that includes a specific buying point and selling point. Rather than be controlled by emotional responses to stock prices like many investors are, momentum traders seek to take advantage of the changes in stock prices caused by the emotional investing. Now, of course, there are drawbacks of momentum investing. For every silver-lined cloud, there may also be some rain, right? So momentum investing also has several downsides. The same risk-return trade-off that exists with other investing strategies also plays a hand in momentum trading. Like a boat trying to sail in the crest of a wave, a momentum investor is always at risk of timing a buy incorrectly and ending up underwater. Most momentum investors accept this risk as payment for the possibility of higher returns. The old saying, high risk, high reward. Some of these stocks have high turnover and they can be expensive in terms of fees. Even though low-cost brokers are slowly putting an end to the problem of high fees, this is still a major concern for most rookie momentum traders. Now, have you noticed right there? Newbie traders would be trapped. We were just talking about this just a second ago. Look at that image right there, right? You're riding that big, huge wave up, right? You're buying, you missed out. So you go ahead and get in at the top, and all of a sudden the dump happens, right? The pump and the dump coincide together. You see this a lot of times in the penny stock realm, specifically the OTCs, and also in the crypto market. Now, momentum traders, they have to monitor the market details daily, if not hourly, because they are dealing with stocks that will crest and go up and down, and they need to jump in early and get out fast. This means watching all the updates to see if there are any negative news that will also spook the investors. Now, I also want to highlight on this part as well, you need to probably not be invested in more stocks than you can handle. Newer investors, maybe only 2 to 5 stocks that you can watch at one time. More experienced investors can, watch between 5 and 10, and those that are, professionals and got a lot more experience, they can watch a few more. There's times that I have 15 open positions and I'm monitoring them all, but even myself, I've been trading since 2005. I get overwhelmed, especially when the market is rocking. So I like to keep my trades to between 7 and 15 actively open trades at any given time. And I prefer to keep my nice little niche at no more than 10 active trades because the market's rocking and you need to be able to pay attention. And if you've got too many open trades, it just starts to become too much and too overwhelming. Now, this is what we were talking about earlier, right? So momentum trading works best in a bull market because the investors tend to herd a lot more when it's heading up. In a bear market, the margin for profit on momentum investing shrinks in accordance with increased investor caution. This goes into the idea that the market always wants to go up, okay? Yes, will it come down? Are there short sellers bringing the market down? Absolutely. But the market always wants to constantly try to go up. So when you get those boom stocks, the boom stocks are rolling up and it's getting people invested, excited into the stock, and then people are going to start profit taking, and that'll start to bring the bear side of the house into play. So this is the $1 million question, guys. Will it work for you, right? So momentum investing can work, but it may not be practical for all investors. As an individual investor, practicing momentum investing will most likely lead to overall portfolio losses. When you purchase a rising stock or sell a falling stock, you will be reacting to older news than the professionals at the head of the momentum investing funds. They will get out and leave you far and in the dust, and unlucky folks holding the bag. If you do not manage the time right, you will still have to be more conscientious of the fees and the turnover on how much they will eat up your returns. Now, I don't want to say this to get you guys thinking that, man, momentum trading sounded awesome, but now Chuck is saying it sucks and everything like that. No. What I'm saying is that these top dogs, right, Wall Street, they get all the information before we get it as retail investors. So we may not be able to get as much of the pie as they got, but specifically, like say the penny stock, right? You start to see the volume come in, you start to see it run, and it pops up, 25%, 35%, Don't be afraid to pull the trigger and hop in onto that trade at the 35% push, because the momentum could push this 35% all the way into 100, 200, even 500% up before we start to see the cool down period. And specifically, if the news is hot and it's buzzworthy, listen, go ahead, take a gamble, pull the trigger, hop into the trade. Make sure you're not putting all your eggs in one basket, but get a little skin in the game and see if you can rock this thing out. But you got to be able to pay attention to the stock, and you got to be able to watch it. All right, so we're getting to the conclusion. The bottom line, right? Momentum trading is not for everyone, but it can often lead to impressive returns if handled properly. It takes several discipline It takes severe discipline to trade in this type of style because trades must be closed at the first sign of weakness, and the funds must be immediately placed into a different trade that is exhibiting strength. Factors such as commissions have made this type of trading, kind of for different type of investors depending on your broker. But there's a lot of other brokers that are now getting in the game. Robinhood, Webull, and some of the other ones, TradingView, that have smaller commissioning fees, if any at all, which are making it so that retail investors can now start to get a lot more skin in the game and start riding these momentum trades. Finally, basically, buying high and selling higher is momentum's traders' inevitable goal. But this goal does not come without a share of challenges. And I'm not going to lie to you guys, I love momentum trading. This is the type of trading that gets me excited. But you got to be able to watch your stocks. You got to be able to watch your position. If you got things going up on the day like meetings or things of that nature, don't get into a momentum type of trade. Look for a slower type of trade because it is inevitable. Murphy's Law comes in, and as soon as you hop in a trade and everything's booming, 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 you got that 1.5 hour meeting, you come back from that meeting, the stock is crushed, and you're already at loss holding the bag, okay? So better safe than sorry. Just go ahead. There'll be another one. I promise you, there always is another one that you can get. But it's definitely the type of trading that is extremely fun because when you see those boom stocks and you catch those huge wins, man, it makes you feel like $1,000,000. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.